US crude has shown a sharp drop and went till towards close to $65 levels. Those who recall, several times I have told that it has consolidated well, and once it stays below 75 and 73.8, stay short. The next target is 70, then below that my favorite support zone at 65, 67. It has precisely achieved these levels. I hope you all profited. This has shown a stronger breakout here. So now what to expect next week, which position you should take in order to profit, we will see with the help of charts followed with indicators. Towards the end, I will summarize and give you the trading levels and strategy for profiting next week. Watch till the end, listen to it carefully, note down the levels, trade as per the levels. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day targets which I share for crude oil, first with the Asia session, next with the US session. Definitely it will help you in your day trading decisions. So do watch both. Let's start. And if you look at let's begin with the weekly charts first. On the weekly charts, $80 levels has provided it a very good resistance. We had seen this and we had also seen that it was consolidating in this zone. And see, last week I told you 75, then 73.8. If it stays below this level, certainly we can expect that it is going to give a breakout, and then my near term levels of 67, 65 zone. It has achieved both of these levels in a very faster manner. See, whenever a breakout happens, it also brings volatility, and that is what we had seen a very strong move last. Now, remember, when a breakout happens, it also continues for a while, and this is the first red candle after the breakout. Possibility exists that we may see couple or more, though there could be lesser bearishness and it may trade sideways. However, it is still to be considered bearish, and it is still to be considered that we can expect further drop from here. But how far? Now let me take you to a recent past and you can see this. This is the consolidation zone at 60, then you can find 62 levels, and then you can find 65. Now see this, 65, 67 is a very good support zone for oil next week. And once it stays below 65, the next target is directly going to be 62 and 60. Remember this fact. Once it stays below 65, next target is directly going to be 62 and then 60 levels. And see, a breakout certainly brings more momentum, because see, it has consolidated for a while, it's created a wall for its own, and now it is looking down. Yes, it is got very much still to be considered on the downside. If it stays below 60, there is lot much of downside to be covered in the near future. That is the first part. Now on the weekly charts you have seen, let's have a look at the daily charts. Now similar observation on the daily charts, higher lows, lower highs, and then this breakout, and we had seen good bearish momentum. Now look at the last few candles. See, higher lows were seen, then this you can say slighter greener candles, and now again giving a breakout on the downside. Remember, it has breached 66, which was the support it has created. It has shown its intent that it can continue with the bearish momentum. Now once again, if you see it trading below 66, first thing is you can wait for 65 to be breached, and once it stays below 65, stay short further. They could be further downward move, taking it for 63.5 and 62 levels on the downside. Remember, once again I am reiterating, this is a breakout and it can continue for a little while. Now on the monthly charts, see, on the monthly charts too, previous three candles, I told you in my monthly review also that see, increasing body size means that it can continue with a good move, and that is what precisely has happened. If you recall, couple of weeks back analysis, lower high diet showed increasing body size we have seen, and see, we discussed that there is support at $70 levels below which further bearishness can be seen. The same has happened and it has come to the support zone, and now look at this, 60, 62, 65, very stronger support zone exists here. Now also this is happening after consolidation, and hence it can try to come back to this zone in the month of March itself. Now if you look at monthly charts more closely, you will find, see, consider this as a building, and this castle's one part is done if it achieves $60 levels here. But what next? Is it going to remain bullish? Yes, it is still not to be considered bearish. What has happened here is that this was the sharp move, then this sideways bearish move, and you can see 65 are going to be a very good support levels. Drop, sideways bearish, and a reversal confirmation in the near months is possible. It can try to retrace. Once it stays above 80, then only we can confirm that it is trying to retrace on the upside. We'll see with the help of indicators, and we'll see how it behaves at around uh, this zone in between 60-65. This is going to play a very important role for the prices of the oil in the near term. Now let's have a look with the help of indicators. What are the indicators are suggesting? On the daily charts, it is trading outside Bollinger Bands. Certainly it will expand the width of the Bollinger Bands, and then the bottom of the bands will give it a support. On the super trend, yes, it is a sell. And also look at the 20, 50, 100 simple and exponential moving average. All of these are trading with divergence, trading bearish, and this also makes 75-80 zone as a very good resistance zone. Now also look at the stochastic is now again back to bottom, and it is near to the oversold zone. It can stretch it for a while before looking forward to rebound. The MACD extremely bearish, extremely divergent, and yes, it has still got further lows to achieve. It can still stretch the drop for a little while. However, look at the candle size. If you look at the past few drops, you can see minus 100 levels. The candle size have heightened there. So possibly it can consolidate for a while before looking forward to or taking a direction, which makes 66-65 levels as a very good support zone. Now, if you look at the RSI, this has also come to oversold zone. Now look at the weekly charts. On the weekly charts, it is trading now below the 20, 50 and 100 weeks average. Bearish sign, 100 weeks means almost two years lows it is trading at. The stochastic is looking down, which is just, it still has some room for it to continue with the downward move. If you look at the MACD, this is again crossing over for a sell. See, it is traded with a slight bullish slope but failed to reverse completely, and now it is willing to cross over again. But remember, one bottom, twice bottom, and if it stretches here, it can try to consolidate at 60-62 if it drops from here, and then from there a possible bounce back can be seen. Now what is happening here is, see, it is still trying to trade in this, and hence uh, see 65 it has to breach, and then in fact till 60 to 60 levels, which are going to play a very important role for the oil's prices in the near future. That is for next few months. I will wait for it to see till it stays above 60. There could be possibility for a very strong reversal in oil prices. That is what is my expectation. But let's have a look further with the help of monthly charts. Also, the stochastic has dropped and it is looking down right now. This is on the weekly charts. Let's have a look at the monthly candle. Now on the monthly chart, the super trend has generated a sell signal here, and this is the first candle which brings oil into a bearish territory. Next is, now it is trading above the 100 months average, slightly above the 100 months average, though the 100 months exponential average is passed, and now it is looking forward to further down. $60 levels certainly going to play a major role. A stochastic looking down, willing to enter into oversold zone. But now see, in my monthly review in the year beginning, I told you for the forecast for 2023 that there is a crossover. This crossover is happening at a high. It can stress the drop for a little while. Now see, on the monthly charts you can find out. Now that is why I say $60 levels is something we have to be watchful. This monthly candle may try to bring it till this level. It can try to consolidate and resume the upward move, and that is now sync with the weekly charts, that the possible bottom for oil could be at around $60 levels, where we may see price stagnating for a while and then reversing from. And those who recall my 3 months back analysis, we had discussed this factor, we had discussed that this is crossover, we had discussed that this is looking down. We had expected that it is going to trade bearish. Precisely the same has happened. Now we will look forward to how it behaves at around $60 levels, plus minus a few tolerance, and then a possible bounce back in the next few months is possible. So for the next few weeks, yes, for the next week also, yes, it is still to be considered bearish. It can still take it further down. We will wait for 66-65 levels, and from there further drop can be expected. RSI is also looking down. and showing bearishness. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you so that you can make profit trading oil next week. And yes, if you want to learn this art of trading profitably, you should join my mentorship batch. The 20th batch starts on 20th of March. Book your seats now, reserve your seat now, reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, first, let's talk about the levels to buy. See, levels to buy are only at 67.2. If you see it trading above 67.2, till the next target is going to be 68, and only above 68 there could be little more bullishness which can be seen. The next resistance I will look forward to 69.2 and then 70 levels. Now remember, only and only if it trades above 70, we can see that there could be little more bullishness till towards 71.5 and 72. And on the daily charts, as I told you several times, it has to break past 73 in order to confirm the reversal, and then it can stretch the rally till 75. Now this is the level beyond which it is going to considered as bullish. I do not see this happening here. Yes, there is a possibility of a retracement. Yes, there is a possibility of a rise, but I do not see it breaking past 75 very soon now. It has given a breakout, and this breakout must sustain for a little while. Now on the downside, one can sell here at 66, and rather I will say 66 point. Yes, 66 is good level to sell, not, but I will give you the near levels in the day trading sessions where I will give you the precisely the near term levels. Let's say 66.5, and if I see it, if I know that 66.2 is a good sell in the day trading sessions, I recommend you to sell there and book profits. Right now on the weekly chart, 66 is a good level for you to stay short. I will look forward to 65 levels this time, and this levels is something which is going to play a very good role, because below that we may see 63.5 and 62 as the next support, and then 60 levels. Yes, there is a possibility that it may try to achieve these levels till the time it stays below, if it stays below 65. And remember, 60, 62, 65 are going to play the strongest foundation role for the near term crude oil prices in the future. Near term means 2023. These levels are still 60. We will see how it behaves, plus minus a few tolerance. Yes, I will keep for it to swing a bit before it looks over to a rebound, but I think this is going to be a good bottom level for you to stay long, but then we will see how it behaves at around 60. So take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, join my mentorship batch and signals channel. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.